Now let's return to our top story. And Europe's a deepening debt crisis. Well, Greece may now get more EU aid to avoid restructuring its debt. Well, our next guest says it's not just Europe that's in a debt quandary. The U.S. is too, except America's politicians are in a state of denial. Well, Trevor Greetham is Director of Asset Allocation at Fidelity International. Thank you so much for joining us. You say politicians are in denial in the U.S. Well, I guess they would be, because as soon as they say we have a debt problem, they risk having the bond vigilantes attacking stateside.
Well, actually, the point I'm making is a slightly different one. I think that the consensus view is that America is getting it wrong and should be doing what we're doing in Europe, cutting spending, raising taxes. Right. They're not doing it. And what's interesting is the markets are not attacking them. So there have been lots of sort of scare stories, if you like, about what would happen if fiscal policy weren't tightened quickly enough. And in America's case, it's simply not happening.
But, Trevor, in terms of what we're seeing in the United States, it's true, they're doing the complete opposite of what we're doing here in Europe. Even the Fed is not even thinking about doing anything with interest rates for at least the next 8 to 9 months. But why do you think Europe is right in tightening if we're not still in a growth cycle?
I don't think Europe is right. Okay. Well, let's say there's a difference between the way that the peripheral European economies are acting. In their case, the markets are forcing them to tighten fiscal policy. And the trouble is, it's weakening their economies, making it less likely they can raise tax revenues, their yields are rising, and the more that happens, the worse their situation is. So we all know, really, that a lot of these economies are heading towards default. And there's a lot of sort of keeping the balls in the air going on with various EU programs. What I think is really interesting, though, is the difference between the UK's policy and the US. Now, they started off doing very similar things to each other in the crisis. In fact, I would argue that the US followed the UK in bank recapitalization with public money, in quantitative easing, fiscal policy to sort of get things moving.
But so the difference is the way that the markets perceive these two markets?
Well, what the difference really is that the UK authorities generally believe that the financial crisis caused permanent damage and a chunk of the economy will never come back. And as a result, they're trying to claw that money elsewhere. And the UK economy is on the fringes of recession. The US, on the other hand, is in denial, and I think quite a positive way, to come back to your initial point, because they don't talk about damage. They just are getting on with it. They're going for growth. They know that there's a fiscal policy correction to come, but they're talking about it in Obama's terms in 6 years' time, 6 to 12 years from now. Obama is talking
but Trevor,
about cutting
fundamentally,
spending.
They are in denial because the bond markets aren't punishing them. They can raise debts and actually not raise taxes, and nothing's happening. Here in the UK, it was almost a do or do scenario.
Well, you see, I don't agree with that, because I've been in meetings with officials in the UK where they've said, well, obviously we are a peripheral European economy, and you know, I agree with them up to the point that geographically we're on the periphery of Europe. But if you look at the way gilt yields behaved in May of 2010, when the big attack on Greece was going on, Portuguese yields were rising, Spanish yields were rising, UK gilt yields were dropping, along with Treasury yields and Bund yields. The UK's got its own central bank and its own currency. So if we have difficulties, we can devalue and we can print money, and that's just something that's not open to peripheral Europe. So I think the UK has much more flexibility.
Yeah. Trevor, we're going to go to a break shortly, but I just wanted to get your sense of asset allocation. How much do you put into bonds? How much do you put into equities at the moment?
Well, at the moment, we're very underweight bonds. We're overweight equities and commodities. We think the global cycle is strengthening, driven by this going for growth we've been discussing in the US.
And commodities?
It's my longest position, so we'll talk about that later, I think.
Yeah, we certainly will. Trevor, thank you so much.